Hi and welcome to the monthly outlook hosted by Centrum. In the last 2 weeks, perhaps, we've gone from despair to delight. The equity markets have obviously rallied big time in this short time frame, about 1500 points from where we were, where about 22,000 thereabouts. The key question that's hovering in everybody's mind at this juncture is this a start of another bull rally? Is the 4-5 month long bear market out of the way? And should you rush into buy now, or can you time it better? How are the near-term equity market outlook looking like from the next couple of months perspective? What should you be expecting from the market? So I think this whole last couple of weeks of rally has kind of, if anything, added to the confusion in the minds of the investors and the markets. First of all, given the place where we are standing today from a macroeconomic perspective, it's much, much better today than what it was a month back. A lot of things have happened in the last 1.5 months, which need to be taken note of and need to be taken note of very, very positively. Number one is the Q3 earnings growth. Everybody had by and large written it off. Nobody really had too much of an expectation out of it. But suffice to say that when the final tally came out, it was very heartening to see that the numbers in Q3 were actually better than what we saw in Q2. So there was a sequential trajectory of recovery which we witnessed both in terms of the organic operating growth as well as in terms of profit growth for non-BFSI companies, which was a big positive. This essentially is telling you that the earnings pressure, both from the perspective of consumption, rural as well as urban, and the credit growth kind of tapering off, seems to be now bottoming out and seems stable from here onwards. It gives you a lot of hope that Q4 is probably going to be in line with Q3, maybe marginally better, and you can then expect a double-digit earnings growth from Q1 onward. So that path, the visibility kind of improves very, very significantly. Second is the new RBI governor came in and within a week we had a 25 basis points rate cut. Very, very high probability that we'll have another rate cut very, very soon as we are speaking, probably in a couple of days, which again is very, very heartening from a market perspective, from a disposable income perspective. EMIs kind of come down, credit growth kind of takes a little bit of a boost. Very positive from an economy's perspective. The third thing is the tax rate cut from RBI's perspective added about 1 lakh crores into the economy in terms of the disposable income, should actually be good for consumption from a mass and the mid level, probably not as much for the discretionary consumption, but at least in the lower income bracket should be very, very positive. The RBI fourth point, loosen the weight for NBFCs. That should mean that the credit availability from banks for NBFCs should improve very significantly. If you look at non-housing NBFCs, the credit growth trajectory has slowed down from 30% to 9%. So this will be good from an overall economy's credit growth perspective. So credit growth comes back, consumption comes back in a big fashion. I think overall you should expect, with the base effect, earnings growth going back to double digits as soon as June, July quarter. And that effectively means that markets being forward looking, probably towards the end of the fourth quarter results, which is mid-May, May is when you should get a very clear direction of how the market rally is going to be. And you can expect the Nifty to be about 26,000-27,000 levels by the end of this calendar year. So there's a lot of money to be made. The time to buy is now, and you can continue to buy over the course of next 2 months. What is happening and unfolding in front of us is essentially the continued volatility that we discussed last month and the month before that as well, where you were of the view that there is going to be a 1,500 point range which the market is going to continue to yo-yo over, and that's essentially where it is. I wouldn't read too much into this rally which has happened in the last few days. So the volatility continues. There are going to be intermittent periods of correction. You will get an opportunity to buy. Do not panic. But remember, be very, very careful about quality. Stay away from sectors like pharma and IT at this juncture, probably more leaning towards BFSI and auto. Hospitals, maybe hotels, those kind of stories. And hold from a 3-year perspective, I think there's a lot of money to be made. Thank you.